Support and resistance are the most basic trading concepts, but most traders do not know how to trade support and resistance effectively, right? You see them complaining a lot about having fake out, being a retail trader. That's why they don't get support and resistance right. But this video is meant to give you some sort of clarity when it comes to trading support and resistance. It's going to show you what they really are and the most effective way to trade them, and as well as avoiding those nasty fake outs you get almost all the time when you trade support and resistance. So we're going to be starting with the basics, right? So what is support and resistance? So I'm just going to drag my screen down here so we have a clean space, right? So a support is simply a demand zone, and a resistance is simply a supply zone, right? So basic demand and supply if you did economics in school, right? So support is a price level where traders are likely going to take buy trade, right? So you see price ranging like this or consolidating. So price bounces into this level. This is a support level. So price moves higher, right? It comes back down, bounces in this level, goes higher. So price levels where buyers are likely going to act, right, based on price action, is known as a support level. So support levels are price levels where we tend to open buy positions, right? Because there's lots of activities going down there, happening down there, right, by traders willing to jump into the market to get a chunk of, the price movement to the upside. So resistance levels simply a price levels where sellers are likely going to take sell positions, right? So you see price movement moving into a certain price level. So like this, you get shorts, right? You see price moving back into this level, you get short. So a price level where traders are likely going to open sell trade are known as the resistance level. So this is basic. I know all traders know this, but the thing is, there are two ways to trade support and resistance, right? So you can either trade a bounce, right? Or you could trade a breakout. So these are the two basic ways to trade support and resistance. So for a resistance level, you could trade the bounce to the downside, taking a short position, or you could trade a breakout to the upside, taking a buy position. So what does this mean? It means when price comes into the resistance level, you could decide to go short, or you're patient enough to wait for price to break through this level and go long. So the reason why you go short is because you believe, based on sentiment, other traders are likely going to go short because the price has been, rejected by this area of value. So it's a resistance or support level is also known as an area of value, right? Area of interest, AOVs. So now the question is, how do you know when to go short or when to go long, right? So even if we know, okay, price levels react on support level and pushes price higher, price levels get into the area of resistance and push price lower. So how do you know if a support level is going to hold or a resistance level is going to hold? How do you know we're not going to get a breakout? This is where most traders get it absolutely wrong. So the reason why they get it wrong is because they trade support and resistance outside context. They trade support and resistance without context. So what does this mean, right? Support and resistance are not meant to be traded alone, right? So you can see if we have a price movement, like let's say we're in a ranging market, right? We're in a ranging market and price comes into a squeezed area where we get this ranging support and resistance, right? So how do you know price is going to, bounce off of this area of resistance or bounce off the area of support? Because at any point, price could easily just break through. At any point, price could easily just bounce off, right? So most traders do not take into context the current market condition related to those support and resistance levels, right? So I'm going to show you a few charts so I'll explain what I mean clearly. So this is a go chart on a 1 hour time frame, right? Now, if you take a look at this chart, you can see that we have a clear area of support, clear area of resistance, and you can see it looks perfect, right? So you have a good area of support. Now, good bounce when price got into this area of value, good breakouts when price got to this price level. So you wouldn't be shorting here because this is the second validation of our area of resistance. So at this point, you don't know if this area of value is going to be a valid area of resistance, right? So you probably wouldn't go short there. But at this point, so how do you know? Now we have two touches, right? So for me, you could pick out a valid area of resistance support based on two bounces of those levels, right? So most traders will tell you wait for 10 touches, wait for 20 touches. For me, two bounces are okay. It's okay, to decide if this is a valid area of support or a valid area of resistance, right? But the distance between those two touches matters, right? So you don't want something like this. You don't want to get, a level like this and excuse me, you don't want to get a level like this and watch out for a movement like this, then immediately another one like this, and you call that a valid area of resistance. That's not how it works, right? So this is one. If it rejects that level, reverses from that level, comes back into that level, this is 2. So this is enough to give you a valid area of resistance. So same thing goes for support, right? So if you have a support level like this, right? So you have a support level like this, you want the distance between both touches to be somewhat significant, right? Not too closely together. So if we get a bounce into this area of support, then you don't want the other touch to come down here like this immediately after, let's say 2-3 candles after, right? You want a proper rejection from that level, then comes back down, another proper rejection, then this becomes a valid area of support. This just supports verification in its basic form. So this is a basic form of support and resistance verification, right? 2 touches, good distance apart, you are good. So similar to what we have over here, right? So bounce, bounce. Now, how do you know that price is not going to get rejected by this area of resistance this time? How do you know it's going to break out, right? So this is where context comes in. So what is context? Context simply means the sentiment surrounding information of your support and resistance, right? So in this case, we have a bullish context, right? So we have a bullish context, bullish market structure, bullish trend. So you could also call it the trend surrounding your support and resistance, right? So in this case, we have a good area of value over here. We have another one here, so support, resistance, right? 2 touches, valid area of value. 2 touches, valid area of resistance. Now, the context surrounding the formation of this support and resistance level or this consolidation is that the trend is bullish, right? And you can tell by taking a look at the market structure. So I'm going to put out a video maybe by Friday, right, this weekend, about market structure, so I can dive deeper, right? This is just to show you how to properly trade support and resistance. Now, the context surrounding this area of resistance and area of support is that there's a bullish sentiment and the market is tilting towards a more bullish scenario than a bearish scenario, right? So you can see that by looking at the price action, right? Higher highs, higher lows, basic market structure formation, right? Now, if you have higher highs, higher lows, what does this tell us? This tells us that the bulls are more active in the market than the bears. So even if we know resistance level are likely going to cause rejection where price reverses, support level causes, price to bounce from a certain level, you do not want to trade a resistance bounce. So most traders do this. So they don't pay attention to the context, they don't pay attention to the trend, they just see a clean area of resistance, they want to go short. So why would you want to go short here if the market sentiment and context is telling you that bulls are in charge? So what this means is price could cut through your area of resistance at any point without any warning, right? So in a bullish trend, in a bullish context, you want to trade only support bounces. So for a bullish trend, you do not want to trade bearish breakout from a support level because price could easily reverse because the trend is bullish. There are more active buyers in the market than active sellers, right? Just take, for example, you see, gold, right? This is gold, right? Gold price is soaring higher, right, over the past few years now. And you see, you tend to note that investors and large financial institutions or traders want to look for the best possible price to buy gold in continuation of the rally to make profit, right? So when they come into area of support like this, they are looking for these support levels to go long because these are deep value zones, right? They're looking for this area of support levels to go long, possibly grab liquidity from these lows, right, before they go higher because the trend is bullish. They want to join the, moving trend to the upside. So why would you want to go short? Even if you have a very good volume candle stick breaking through the support level, you shouldn't be going short when the context is bullish, when the trend is bullish, right? In other words, you should be looking for opportunities to go long after a bounce, right? And those bounce could mean waiting to see how price reacts with an area of value. So let's say, for example, price breaks through, you wait, a reversal back into this area of value, look for your confirmation, then you go long. So you don't trade breakout of support when the trend is bullish, right? Just as similarly, you don't trade a bounce of resistance when the trend is bullish because there's a very likely scenario that price breaks through resistance in continuation of the trend, right? Because that's what's been happening if you take into account the context of the market, right? So you see similarly another one over here. You can see when you see structures like this, you see higher lows, you see pressure mounting towards an area of resistance. So in this case, you shouldn't be looking to trade a resistance bounce. So you shouldn't be looking to short resistance levels when the context is bullish. So a lot of traders don't pay attention to this. They just see a support and resistance level and they want to jump in, take those trades and just make money, right? Because you know, in its basic form, a resistance level is where you are likely going to see price rejection, right? But there is a context added to that. So you should add context. Why do we have this resistance level? Why do we have this support level? Am I supposed to trade a resistance bounce here? Am I supposed to trade a support bounce here? Am I supposed to look towards breakout here, right? So I'm going to show you another example. So let's move on to another chart. So USD CHF, for example, right? If you take a look at what we have over here, right? A breakout in continuation of the trend. So this one now is a breakout, right? You can see that we have a clear support, right? Context is bearish because you can see lower highs and lower lows. So a breakout didn't even reverse. This is the power of, you know, context behind your area of support. So it will be crazy to go long, yeah, right? A lot of traders do this. You may not, right? But a lot of traders do this. They feel because there's a good support level here, they want to go long. But this is not the way to trade support and resistance, right? You trade support and resistance based on context, right? So what is the sentiment surrounding the creation of the support and resistance? And you can see over here too, a good area of resistance, solid one. You can see the movement to the downside, immediate rejection, right? Besides this one here that blew off to the top. So I am an aggressive trader. I probably would have gone short here, but I've gotten a tighter SL, maybe 20 pips or 10 pips as the case may be. But if I cut this one, then this wouldn't be a problem, right? So you get better entries, tighter risk to reward ratios when you trade in line with context, trends, with sentiment, right? So over here, based on the structure here, right, we know that the bears are in charge of the market. The bears are more prominent in the market than the bulls, right? So this thing is falling hard like a rock. So everybody are looking for the best price to sell, to take out their positions. So the best price to sell would be shorting a resistance level, right? Or waiting for those confirmations before you go short. Another best positions to sell will be shorting a breakout from resistance level, from support level, because it's in line with the current market sentiment, right? So that's it briefly for this video. I just want to briefly show you the mistakes most traders make, and just so when you are trading support and resistance level, take into account context. So taking into account the context of the market simply means you tend to filter out your trade positions properly, and it gives you a higher win rate when you use support and resistance, right? So one more thing I would like to show you, right? Trading without context. So over here, you can see we have support within consolidations. So this is a good example as well. Assuming this was just a ranging market, right? So what you can see on my chart is what it is. Some traders want to go short after a breakout. For me, when market is ranging, I ignore support and resistance levels completely, right? Except, you know, it's in line with the overall trend, overall market structure. But for now, looking at this chart, creating a low here, another low here, it would not be a smart decision to go short here, right? Because the context behind the market isn't clear. There's a good chance we go higher, there's a good chance we go lower, because you can see it's clearly ranging, right? So even if you go far back, you can see we created a lower high, and now this high is higher than this high. So now we have a higher low and we have higher high. So are we going up or are we going down? So that's why you wait for clarity before taking trades like this, right? So I'm going to zoom in, right? Zoom out, excuse me, so show you what I'm talking about. If you go to the 6 hours time frame, this one is a bit wider, right? But if you go to the 6 hours time frame, you could notice that we have a good area of support here, right? So this is where multiple time frame analysis comes in. I think we have a video on that. But see, on the 6 hours time frame, you can see we have a good area of support, right? But the difference between this support and this one over here is that this goes in line with the overall trend on the 6 hours time frame. You can see lower highs, lower lows confirmed. So when we take out this area of support, it tends to give you a solid trade with volume, right? So that's what happens when you put context into consideration when trading these support and resistance. So you can see over here, without context over here, so assuming this was just a range market, then this wouldn't have been a smart positions to go short, because now we have a much larger area of value over here. So this is what you should pay attention to if you have context, right? Which is a bearish trend in this case, right? So if you have a bearish trend, bearish sentiment, then you want to go short. So if you have a clean area of resistance, for example, then you want to go short at those resistance level. Look for opportunity to go short at those resistance level, right? Not trade breakouts from those resistance, because a slight breakout from those resistance could mean liquidity sweeps, right? Maybe I'll find time to talk about liquidity sweeps and whatnot. But for now, I want you to understand that when trading support and resistance levels, context matters, right? Context matters. If you found this video helpful, leave your thoughts in the comment section down below. And if you're interested in learning to trade like I do, I trade complete price action, right? You can check out my complete trading system. I have a link pinned in the comment section down below. That's for this video, guys. See you in the next one.